Hello and welcome back to another video on this channel. So today I wanted to do a different type of video. I just wanted to explain how my strategy works, how I implement certain concepts, what do I see when I enter a trade, and what are my confirmations. So we'll get right into it and I'll explain and break down our trade that I took previously this week. So it's all about the time frame alignment. So we always want to start in a higher time frame to define our trend, and then we drop to the lower time frame. So starting with the higher time frame, I have two higher time frames, which are the daily and the 4-hour. So therefore, on the daily, we start there. We identify the trend / flow. So we identify if the flow is bearish or bullish. If we have, say, bearish flow, we drop to the 4-hour. Over here we're gonna identify structure. So once again we want to see bearish structure, which means lower highs and lower lows. Apart from that, I want to draw key levels where price is likely to react and respect. So therefore it's either supply or demand or support and resistance, whatever you want to call them. On the 4-hour, on certain structure points, I draw these levels, and after that I just say we are shorting because we're in a bear market. I want to sell at resistance, so either we are looking at break and retest of the resistance or just a simple retest of the resistance. If I see that the price is at the area, we do not enter just yet, but we drop to the lower time frame, which is the 5-minute, and we have the entry by a trend line break. So I'll get right into it, what trend lines are good, which are bad, and how do I enter. So I'll explain how I took this trade, the USD CAD one, but also it's the same as this one, same as this one, same as this one, so it's the basic principles. So we'll get right into it and I'll break it down. So we start on the daily on USD CAD. So we see that we are on a bearish flow, right? Creating lower lows, lower highs, lower lows, lower highs, and continuing to be bearish. Therefore, we are bearish. We jump to the 4-hour. Over here I see the structure. What the structure is doing is still doing, lower highs here, lower lows, lower highs, lower lows, lower highs, and then expected to be a lower low. Second thing, I draw the key levels. We see the most prominent one would be here. 2 to 3 are more than enough. We do not want to overcomplicate things. Some like this. So we see that price is at this area, and this is the most respected one because we want to sell from here. We do not want to sell from this area because if it breaks this structure, it means that it creates a higher high, and then therefore we are not bearish anymore, we are bullish, and we have created a bullish structure, and we do not want that. So therefore I'm interested in selling here. If I have a close break below, I'm not interested anymore. We see that price is at resistance. Like I said, we do not sell just yet, we drop to the 5-minute. What we see here is a beautiful trend line, which have several touch points. And what do I mean by that? We need always 3 or more touches for a valid trend line. So it has 1, 2, 3. From this moment, if the trend line breaks after here, we are entering. Of course, after reaching here, but we just want 3 or more touches, which is the first principle. We see that this has 1, 2, 3, 4, 5, and now we are expecting for the price to break this recent lower high, breaking close below the trend line and below this area, so we create a new lower low. So we anticipate the change of the direction and the change of the trend, and we are expected to turn bearish. So we wait, we sit on our hands for now. So we see, we just extend the trend line. We have another reaction from here, so that creates a lower high, the new lower high, and we move our area here. We wait, Okay, so as we can see, this big candle, big bearish candle, which has a lot of volume, breaks the trend line and breaks this minor area of interest or the last lower high or whatever you want to call them. The trend line has 1, 2, 3, 4, 5, 6 touches, which is perfect. And the other thing is it's not too steep, because if it was like, say this, we wouldn't want to enter because the buyers are still in good control. If it was something like this, which is here, or something like this, it's right because we see that the buyers are losing power, but we do not want it too steep. So over here we place our entry. The stop always goes above structure wick, so we see we have a higher high, a higher low. This is the structure which failed to create that higher high, so therefore I place my stop over here. And I always go for a 1 to 2, but if you want to go further, you can just target opposing liquidity levels like this, which would be this one here. So yeah, then we wait, goes a bit into drawdown, but then it just smashes through TP. So yeah, but that's my strategy in a nutshell. It's pretty easy, not complicated at all. It has some concept which everyone can learn and everyone can implement in live markets. So yeah, watch this for yourself. You can backtest it. Usually has like a 65 to 70% win rate. Couple that with a higher RR, it gives you very good results. So you can see for yourself. And thank you for watching. I hope you learned a lot from this one. Yeah, I'll see you around. Thank you.
Cual montuno de plata